Hey, good afternoon, everybody. This is Dennis Wilborn, founder of Active Trend Trading. It is time once again for this week's Stock and Options Swing Trades Weekly Update. So let's jump right into what we have on the charts. We're going to get started here with the spiders. The spiders basically represents the S&P 500. And I'm going to start here with the weekly chart. Just to give you a flavor for what has been happening with the weekly chart, what's the longer term trend. And it's always a good idea when you're looking at particular stocks to start with what we'll call the anchor anchor chart. Excuse me. The anchor chart is basically the longer term charts that sets the tone or the trend for the other, and then basically then you do your triggers for trading off of the shorter term time frames chart, such as the daily chart, or even going down to the 78-minute, half hour, 15-minute chart to go ahead and try to get a more precise entry. What do we see on the spiders working up here? One is basically you go over here to the left. It's kind of in a, yes, we've had several pullbacks. However, it's in a trend up to the right. What is it currently doing? Again, this is the day before Thanksgiving, 2020. So we're basically just driving sideways in this this horizontal channel. And so how do we want to trade that? Well, we know we have strong support on the bottom, and we have strong resistance on the top. So we don't want to take trades that are close to the top unless they do a breakout. We don't want to take trades to the downside close to the bottom. So that's basically how we look at trading this. And so let's take a look over here on the daily chart. As you can see, TSI showing a little bit of negative divergence. Market forecast, the green line, the intermediate line on the weekly chart showing a little bit of negative divergence. And what I'm talking about with negative divergence is as prices make new highs, these momentum indicators are not. They're basically just kind of going sideways to down, and that's an indication that just momentum hasn't shifted. It can also mean that momentum, like a slow leak in a tire, is just kind of seeping or basically coming out of the tire and may eventually go flat and then drop from there. No signs yet to say, we're heading toward the downside though. So let's take a look. So what do we have? Okay, as we can see, we're through day number 3 this week. So there's Monday, Tuesday, Wednesday. Tomorrow is a holiday. Friday, Black Friday, remember, is a partial day. So the market will be closing up 4 hours early. And there's not a whole lot to do. What am I looking at? Again, we're close to this upper level. I don't want to really trade that, to the upside unless we do get a breakout above this area. Then this level of resistance reverses the polarity and becomes a level of potential support. I would look at potentially trading off of the spiders. Any type of bounce, if you want to trade the spiders, look for a bounce down here at this past support, or as the moving averages, the 8 and the 20, continue to move up. That may give you a place to jump on a trade. Right now, not a lot. A little bit of bearish divergence is going on here on the TSI, but again, no strong move back to the downside. What about our buddy the Qs representing the NASDAQ? NASDAQ was an index that was up for the day. It had been kind of lagging the last couple of days, and so we are glad to see it pushing back up towards where though? It's pushing back up towards past level of resistance. And so we have this whole zone of resistance up here that runs from about 297, 57 all the way up to the top here at about, let's say, 303.59. So if it does jump, prices do jump up in that zone, then we can pay attention for potential reversal candlesticks to say, hey, let's take a ride back where? Back kind of down to this past levels of support. It's got to cut multiple levels of support down here at the bottom. It is a positive, and I will throw this out at you. It is a positive that this current move stopped halfway down Oftentimes that can lead to a bullish breakout. Hasn't happened yet though. Let's take a look and see what the weekly charts are telling us on this puppy. Again, also moving in a sideways pattern. This is wide enough now, folks, to basically look at buying calls or doing a bullish spread at the bottom of this range, doing a bearish spread at the top of this top of this range. We're almost at that level where we could do that. If I do get, and it maintains where it's at right now, I would look at potentially doing a bearish spread going into the weekend. Why is that? Well, one, we know that we have a high here. We've got about a about a $6 high. If I get into the middle of this green zone or I get a reversal candlestick on Friday, I would look at saying, hey, I'm going to go ahead and do probably a put debit spread, which is a bearish trade, expecting it to move down to the downside. And what's nice about these, like the Qs, the index ETFs, is that they have dollar or less splits between their strike prices. So you can hone it in, and if you're learning how to trade spreads, it works really great because you can just take a $2 wide spread and maybe pay 75 cents to $1 from it. You have a 1-to-1 risk-reward ratio, and then if it goes in your favor, take your profits off the table at 50%, and that's how you can learn how to trade spreads. And of course, with active trend trading, we do have one of our strategies that's specific and honed in on trading spreads. We call it Strategy 2, and it's doing pretty good. It's up about 130% for the year so far. So that's what we're looking at on the Qs. Well, let's switch back to the weekly and go on over to IWM. The IWM emulates the Russell, and I've got all kinds of lines on this one. As you can see, it is actually breaking out the top side of this upside area. I'm going to go. No, I'm not going to. I'm going to hone in on this. As you can see, we are pushing up. We have basically broken out. No signs of a reversal candlestick. However, again, no signs of a reversal specifically on the TSI on a weekly chart or the just slight negative divergence on the market forecast intermediate line. What about on the daily? Daily paints a little bit of a different picture. Yes, it is in gear to the upside, driving really hard. I would adjust it, it may go on up here and hit the 1272 extension. And that 1272 extension is the extension off of what? Well, from this high here to this low. That's the full extension from there to there. And that's a good intermediate target for a continued upside. We can, of course, say, hey, well, if it hits that, what happens then? Well, then we'll start looking at the 1618 for a potential upside target. However, what we need is a pullback into the 8 and or the 20-day moving average. Hasn't happened yet. Once we had the breakout back here in early, just after the election, actually, earlier this month, it has basically respected the 8-day moving average all the way up to the upside. It has not given us a lot of room or any signals to say, hey, let's jump on board. So what am I looking for? I have no reversal signal to the downside. I have no trigger to trigger a trade to the upside. Where would be a trigger for a potential trade to the upside? Look in a couple of places. I'll basically draw in a couple here. Basically, a pullback down to these where the breakout happened before, about there. Could also pull back in between the 8, there's the 8 right there, and the 20. So pull back into there. As you notice, there's a nice level of buying that took place before. So what are the levels on those levels? One, this first level happens to be at 178.84. The second level down here is at bump that down there enough. There we go. About 173.63. So those are levels of support I would look at having a bounce. Since all the moving averages are all stacked to the upside, I am not going to jump into a bearish mode on this because everything is stacked to the bullish direction, or the upside, if you will, if you don't like to use the term bullish. So what about a couple of stocks that we're basically jumped in on? You know, if you trade with us on the top 5 autopilot pre-flight checklist service, you would have gotten triggered into a couple of trades this week, and those trades happen to be, let me look over here. Okay, they happen to be light, and I'll show you light, and then I'll show the other one that we did. That we did a nice light. Really set itself up very nicely. Where at light set up? We got into light at $81.02, right? Basically, just in. Maybe we got into that last week, but in this area here, we jumped into this $81 and actually 11.19, 11.18. So we got into actually right here, pulling back into this level of support, and now it's moved back up to the upside very nicely, up about $2.91. So we got in this day right here as it was pulling back into support. It's looking good. TSI is starting to move back up, and also now this stock also happened to have really good open interest on the options. It had monthly options, not weekly. No, I'm sorry about that. I think it had weekly options also, and so it lent itself to trading both the stock, low price stock, and also doing some nice trades with the options. You could jump in a trade on the options for, oh gosh, the $47.18 December call was going for $2.42. And that was, when was that? Let me see if I can get a, okay. That was actually on 11/24. So, you know, looking really good on this pullback. And so we'll see if that continues to move up from there. The other stock that we did not do we did not buy the stock, but what we did do was we did a bullish spread trade on it, and that's DOCUSign. DOCUSign, we've been making lots of money on this whole year because we've been taking the trades on DOCUSign, and we triggered into DOCUSign. We actually highlighted this on the 20th, which was last Friday, and we also highlighted on our premium webinar that we do every Monday for our premium members. I said, you know, if it goes back above this level here, above the 217, this was 217.17, we put in an order to buy some if it went back above 218.10 or something like that. And basically that basically was triggered today, and it looks like we may get free sailing all the way up into here. And this, what we did this in response to was two things. One, a good technical pattern. It was the TSI was heading up in the right direction. The moving averages were moving back above the 8 to 20, and we've got a whole cluster right there, 820, 34, and 820, 34, and 50 right there, all together. Strong level of support. And so it's moved back up, anticipating a move into earnings, and move into earnings would take us probably, you know, if we break out there, we're probably going to go up here. So what did I trade on this? And again, we opened this, it triggered in today on the 25th. I bought 5 contracts of for December because earnings are on the 4th, on the 3rd. So I'd actually be wanting to close this out prior to earnings. But what I can do, I bought enough contracts where I can close out like 3 or 4 of them, let one of them ride through earnings if the other 4 were profitable. And basically, if it does rocket ship away from us, we'll get to clear out all of the profit on this particular one. But we went with a 7, and we actually went with a $10 wide spread on this one. We got in at $4.10. We had the December 4th, 217.50 by 227.50 calls, And so if it goes above the 227.50 level, which just happens to be right there at that past high, how about that, how we plan that one? Then we can anticipate, if it gets above that and just continues to rock and roll, we'll take off again some of the profits on off of three, or two or three of the contracts. And as long as I'm profitable going into earnings, and I've basically covered my cost on the whole deal, which was $4.10, I will basically let that ride through earnings. If it goes in my favor, it will gap up and move higher, and the volatility crunch after earnings will basically suck all the premium out of it, and that's on Thursday. And on Thursday, I'll basically close it as soon as the ball is sucked out of it due to the earnings. So basically, hey, if you like that kind of trade, you do need to think about joining me in the active trend trading system. Again, I love trading, providing you these free videos on what we are trading, what we're looking at for stocks and options. But please come and join us. So we have a couple of different services you can get in on. If you just like to trade stocks, there's the very simple $19.99 per month for the top five autopilot trading system. And it gives you 5 top growth stocks every week with the technical analysis of when to enter, where to exit, and what to expect, along with a short video that shows exactly on the chart what I have planned. And then if you're, if you want to be a little bit more advanced and basically also open up the door for additional potential profits, you can also become a premium member. Would love, our premium members have a great time. With the premium members, you get the big things you get is some additional live training sessions, and this is a biggie, text trading alerts that specifically tell you, no matter where you're at, no matter, in the U.S. or in the U.S., you will get a text message saying, here's the alert, here's how to put your order in, and then there'll be follow up with a email. So again, from my house to yours, I just want to say aloha, God bless, have an absolutely fantastic Thanksgiving. I hope you get to enjoy it with family and friends. And again, stay safe, stay sane, but dadgummit, don't give up your freedom. Aloha.